Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to talk about natural gas report update. Kind of realized that we might be talking to ourselves on this one because nobody really wants to talk about natural gas anymore. People are generally in a market are generally bullish. This one has been a train wreck to the downside, which is extremely profitable. Downside movements, especially natural gas, and we'll take a look at that, are extremely profitable. That's not what people want to talk about. So we're going to talk about this for the few people that are following this report. It will likely move back to a bull phase at some point, but this we have to look at where we stand in the evolution of the trade, who's leading the selling, and can this continue downward. If we take a look at the evolution of the trade, the alignments is triple down. You can see it here, down, trip arrow down. Except this composite trend is now late cycle. I marked the arrow for 1. That makes it late. The reason why it's late is you can see it here. The daily price move. It's just phenomenal. It's 5.5 standard deviations above the normal cycle. That is a move that's got a lot of power. It probably tells us that the retail investor is selling like crazy. We're going to take a look at that as well too, and we're going to confirm that. Across the board, you can see that there's not much else going on. The weekly cycle is not stretched in terms of price or time, and the monthly, even after a powerful move like that, hasn't done a lot. It's still below zero, which tells you how much the cycles are, or how big the cycles can be on the primary trend, and you have to be wary of that. Let's take a look at the sticks here. We look up and we can see that this is a big downward move. Everybody was super bullish on natural gas, and then when the reversals gave way. Actually, a couple things happened. The primary trend flipped down. Rule number 1, don't fight the primary trend. Anybody who did has been extricated to the curb, placed in a body bag. That's how it works. The bulls have been bag holders here because the primary trend flipped down 3 months ago. It's a pretty healthy move. You can see it here, 3 months, 82%. Green boxes are rallies, unshaded regions are declines. This has been a powerful decline. We talked about the mechanics of statistics of the primary trend already a little bit. If we slide across here, this is the lead MI isolated NG. For UNGs, which we track, you can see the impulse here is 82%, 3 months, doesn't look like much. You can see in general, this is where we should have been worried, at least the bulls. The bear counts have been 15 since 1990. There's been 15 impulses. This is another one. It's not finalized, so it's not going into 16 yet. There has been 0 that have failed after 1. The number of counts, you can see 0%. The average duration is 15 months once this gets started. These are all warnings. You swim against the current in the ocean, you will drown. And this is the point of having the computer define the multi-time frames for us. When the primary trend goes up or down, don't go against. You can stand to the sideline so you can watch. If you have firm beliefs or a bias towards a different direction, again, that is absolutely dangerous to have a bias, to have a belief structure that counters the primary trend. I can't tell you how many times I repeat that message, learned that message decades ago, and now we just try and teach everyone as much as we can. But I do know that this generally tends to get ignored. The majority doesn't want to hear that. The majority wants to do what they believe, and they usually get destroyed by it. Now, the average bearish count is 174%, so that makes today's 82%. Not that impressive. You have to be careful. The max average is 202, which means, and the biggest move is 1500. I mean, that's a phenomenal move. So these are all things that can happen. And some of it has to do with the instrument that you're tracking, the GUNG. Still, there's big moves in NG. They call it a widowmaker. It's only the widowmaker because people have belief structures, and that is the death in anything, and it will particularly kill you in natural gas and Bitcoin. I've watched a lot of people get freight trained. The damage in natural gas is even more than Bitcoin. Well, not yet. Bitcoin almost went to above triple digits in the downside move. Hasn't recovered yet either. Natural gases could be in the same realm, but I don't even know if anyone's going to learn any lessons from either one of these trends. But the whole point of this is to continue this on, so we teach. 3 months down, 82%. It hasn't flipped. Now, you might want to like take some profits. I mean, these are all things that are up to the individual. The daily trend is 5.5 standard deviations. I mean, and it's a late cycle for the composite trend, largely because here, taking profits into a dive is not the worst thing in the world to do. You don't have to take all the money off the table, but you certainly could take some, and it will probably look back and say, well, that was a wise move. Counter trend rally is likely due at some point. Now, it's going to probably be due because we broke below the reversals. This is the weekly reversals. You go into the reversal tab, pull down UNG, find natural gas, pull in the weekly, cut that over into this chart, and you can see the wheels fell off when UNG fell below 922. That's the large clustering of red lines. Now we can come back and test that into a counter trend rally. So this is not a bad point to take some money off the table in anticipation. Anytime the daily price cycle gets above 2 standard deviations, you can start considering taking profits in the direction of against the direction. So if the primary trend is down, you want to cover some of those shorts. If it's up, primary trend is up, you want to take some profits on the long position. Now what it can do is it can come back and curl into this band that's here. It's 920 all the way, 9 handle, and you can see the 10 handle, but it's pretty firm. A retest, a break below, this breaks the ice, come back, curls again, and then resets again. That would be devastating for the bulls, but it wouldn't be, it's not out of the norm to expect that it would come and test the underside of what was once support as resistance. Now, energy and participation does warn that something a little bit is up. We normally look at the energy builds. We talk about WA and DI and DI2. These haven't changed for almost a month, but they should get updated soon. So we're still looking at energy build through participation. Here's UNG, here's the pro index, and here's the public index. And you can see that the downturn, this large ski slope, was pretty much participated by everyone, all the way down from in the box. Now the retail is starting to sell out of the box as price is breaking down again into a new low and breaking down on its own box. Retail is confirming it. What's not is there's now a slight, there's a bearish divergence here, but there's a bullish divergence here because the pro index is not generating a new low yet. Now, it could later, but it does warn you that the pros for the first time is not chasing the selling down. They're just the retail. Retail couldn't time anything, so it's rarely wise to stand with them. They're selling because the price is down, and they're selling because everyone else is selling. Pros are not coming along. They're separating themselves. The professionals, the minority, is separating themselves from the herd. So keep an eye on that too. You can get the pro charts over in here in column BM. Click that link and get this chart. You can do anything you want with these charts. Keep an eye on what we're talking about here is a subtle bullish divergence. This is going to last a while. We're going to like to see what the energy build does in the next week or so if the CFTC can update that. If it does, it'd be interesting. There could be massive accumulation here, and that would be something that would be extremely bullish, at least shorter term. Now, it's not going to be bullish to the point where it all flips the primary trend. What it could do is it could cause a counter trend rally that gets back and plays around with this band here, and then it could and then once it releases some of that energy, it could roll over again. These are all possibilities. So that's what I would keep an eye on. Keep an eye on this participation. Keep an eye on the professionals. Make sure that it doesn't confirm to the downside. Now, one last thought in terms of the seasonality. We're in the strong period from February to April. These tend to be good months. This would be an area where the market would likely do some sort of counter trend rally. The retail selling here doesn't make any sense whatsoever. You need a couple month or two of a counter trend rally in order to retest the once old support as resistance, and that would roll over again. But this is the seasonal trends that you're dealing with. Further selling might come in late spring, early summer. And then you want to, and then there could be another rally. These are all tendencies within the seasonal cycle. But again, none of this lays and is going to change the primary trend. The primary trend is still down. It's just that it's pointing towards something where you might want to take a little bit of profits, and then where this could reaccelerate again, and then where you would have, potential for a rally. The seasonal cycles tend to influence the trading cycles as well. But then again, if this is really going to break down, it's going to do so in the fall of 2023 for sure. That's something that you would keep in mind, and that's why the computer will always keep a core position as long as the primary trend is down, because it doesn't care about catching every wiggle in the chart short term, that's not what I can say when I follow the internet or watch around social media. Everybody is have to check. They're trying to guess everything short term, 2-second charts or whatever. That is not what you want to do in terms of like laying the foundation of where direction is, where the currents are, where the cycles are. You can trade shorter term, but don't do it against the primary trends and the secondary trends. But that is violated so often, I don't even wonder why I put out these videos. I do think that the few people watching them are learning not to do that stuff. But then again, I'm pretty sure that they probably don't tell me the truth either. They have to learn by pain, and pain is a tough way to learn. So natural gas is a setup that's benefiting the bears. The primary trend's down, still relatively early. There's some need for probably profit taking based on this cycle. And you don't want to do it because you're thinking it can continue to go, but how far are you going to push this cycle? That's why you have a computer to help you out. These are profit taking points. You never don't want to take all your money off the table because the primary trend's still down. And you can use the seasonality, and you can use the reversals and things that we talked about, participation, to help decide. And hopefully energy builds will come back here on Friday. If you have any comments or questions about what we talked about, let us know. If not, thanks for watching today's update, and we'll talk to you real soon.